Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start with Asian stocks. They were mostly narrowed their early declines near midday, taking their cues from the mainland, where the benchmark, of course, Shanghai Composite Index, recouped some losses after trading down as much as 5.1% early on Tuesday. The Shanghai bourses last traded down 2.6% on choppy trade, falling deeper into the red after cutting losses to 1% at midday early. The Shanghai Composite opened down more than 4%, raising fears of a fresh stock market rout in the world's second biggest economy. And of course, turning an eye to Japan's Nikkei 225 index, it managed to pull back to neutral territory by the end of Tuesday. However, pairing losses which took the bourses down to a fresh two-week low earlier at the open. The safe haven yen was below the previous session's high after it hit Shanghai stocks that were tumbling down 8.8%, their biggest drop in 8 years, which helped pull down European and U.S. share markets as well. The dollar rose about 0.3% on the day to 123.57 yen after falling as low as 123.01 yen on Monday. While of course, the euro against the yen was slightly up 0.2% at 136.92. Australia's S&P 200 index erased early declines as the meltdown in China, Australia's biggest trade partner, as we all know, took a bit of a breather. European equities in the Eurozone, however, opened higher on Tuesday, with investors around the world watching how China's stocks are trading after a sharp drop on Monday, and of course volatile trade in the current session as well. The euro currency inched slightly down about 0.1% to 1.1082 after scaling a near two-week peak of 1.1129 on Monday, as risk-averse investors paired their euro short positions. After, of course, this week's Fed meeting, the next main event for the dollar will be second quarter U.S. gross domestic product. That will be the first estimate of which will be published on Thursday this week. Elsewhere in Europe, the pound strengthened on speculation. Economic output data will add to signs of recovery in the UK that are publishing from Bank of England policymakers to consider the first interest rate increase in 8 years. Sterling was little changed at 1.5557 in early European trade. Gold in the commodity sector hovered near its weakest level since early 2010 on Tuesday, reflecting investors' hesitation to bid up bullion on growth expectations of a near-term hike, of course, in U.S. interest rate. The Federal Reserve begins a two-day meeting later today, where policymakers are likely to signal that a rate hike later in the year is certain as the U.S. economy strengthens. Gold was nearly flat at 1094.40 an ounce in Asia trade, and it fell as low as 1077 on Friday, its cheapest since February 2010, stretching its longest-running losing streak to 5 weeks. Oil prices fell toward a 4-month low on Tuesday, dropping for a fifth straight session on persistent worries about a global supply glut, while stock market sell-offs on both sides of the Pacific also rattled investors' sentiment. U.S. crude dropped 20 cents to $47.19 a barrel after ending the previous session down 75 cents. It fell below $47 mark post-settlement, the lowest since March 24, with, of course, further expectations for declines today. And the most important events in the calendar today, we're looking at the UK GDP numbers. It's a preliminary report in about an hour time from now at 8:30 GMT. That's all for today. Thanks a lot for watching us. See you next time. Bye-bye.